All right, man. What is up? So today I took a W, and this has to be one of the easiest strategies that I have been trading. It's very easy, it's very simple, and I've been breaking it down on all my videos, and I've just been more consistent with it. I've just been like slowly growing my account, not really going crazy, but slowly growing my account. And I say this is lazy strategy because it really is. I woke up today and I was just trading on my iPad. Woke up, barely had my eyes open, and I took this trade with just an iPad on my bed. I was literally on my side, just like this, looking at the charts, and I took this trade, and it was a W. Now, it's crazy because I used to be the person who used to wake up early with like an hour before the markets open. I did all that pre-market analysis. I had a big ass monitor. I had like five screens looking at me while I'm trading, and then I would take losses, and I would end up trading worse like that than I do now when I'm not even taking it seriously. I'm literally just on my bed, waking up, and it's like I'm literally lazy. That's why I call it the lazy strategy, because I'm literally like a lazy. Like I don't even get up fully, and I'm still hitting these trades. But I'm gonna go over why that is the case, towards the end of the video. But I'm gonna just break down the trade and why I took this. But I'll break down more kind of like the psychological aspect of why this is better for me, and how you can actually start being more consistent, not taking the market so seriously, but only looking for a couple things. I'll get to that at the end of the video, but right now let's break down the trade that I took today because it was actually a banger. So without further ado, let's get into it. So, like I say, and like I go over all my trades and all my videos, let's go over. If you've been watching my videos, you know what I look for. So number one is going to be, you already know, market structure. So number one is identifying what market structure is doing, okay? Because when you identify and you understand what market structure is doing, it makes the process so much easier. And not even that, if you watched my last video, you saw that I took a little loss because market structure was off. I didn't understand market structure. So not understanding market structure can fuck everything up. Okay. Now number two is going to be supply and demand zones. That's what I use. Supply and demands. If the market is bearish, then I'm looking for supply zones. If the market is bullish, then I'm looking for demand zones. Now, it's not even just any supply and demand zone, it's valid supply and demand zone. So let's do this right here. Valid supply and demand zones. Okay. And the last one's going to be an entry model. Now I have a four entry model criterias, and these are not criterias, but four different type of entry models. And the first one is going to be a confirmation. I don't even know if I spelled that right, but fuck it. And then the next one is going to be a risk. The next one is going to be candle close. And the next one is going to be a rejection entry. And I go over this almost in all my videos, but just to let y'all guys know, if y'all guys are new, or just to reiterate this so y'all guys can really understand what I'm talking about. So number one is market structure. So let's identify market structure. Okay. So right here, we've identified that structure is bearish on the 15-minute because we have this low, this high, and then we have boom, a low right there. So now once I understand what direction structure is going in, now I want to look for valid supply zones. Now this right here is a valid supply zone because what do we have? We have this candlestick that causes impulse move down, which caused a whole break of structure. So this right here is a valid supply zone on the 15-minute. But of course, we didn't tap into here, but it's good to always have it marked down and always leave it there just in case it does tap in. But it never ended up coming in and tapping into there. And here's another thing: just because it doesn't tap into this one doesn't mean it's over. Because this ended up playing out, not playing out like at 9:30, but we didn't get another valid one until this one right here, which was at like 10:45, so like almost an hour. Okay, so now once we identify what direction structure is on the 15-minute, now I want to look at what structure is doing on the 5-minute. So structure on the 5-minute right here, I'm looking at structure on the 5-minute because that's the tricky part. I want you guys to understand structure on the 5-minute. If you don't understand it, it could really fuck you up because structure on the 5-minute is going to switch before on the 15-minute. And what I mean by that is like we're gonna have a change of character happening on the lower time frames before they happen on the higher time frames. So if you're so if your bias is so bullish because you think the 15 minute is bullish, and you're just so adamant that we're bullish, we're bullish, we're bullish because on the 15 minute is bullish. That's good, but you always want to focus on the lower time frames because we're gonna have a change of character or a market structure shift, whatever you want to call it, on the lower time frames before they happen on the higher time frame. So yes, the market could be overall bullish, but remember, if there's a market structure shift, it's gonna happen on the lower time frame. So that's something to keep in mind. I want you guys to keep that in mind. But on the 5 minute, we were bearish, as you can obviously tell right here. We were bearish on the 5 minute. We had this low, we had this high, and then we had this low. So right here is the break of structure. So let me write a little break of structure right here. Boom. Actually, let me do this right there. Kind of, there we go. And then I can put BOS. So that is going to be a break of structure. So that was the break of structure right there. So this was a break of structure. Now, guess what? Market structure is what? Bearish. So let me actually write this right here. Market structure is what? Is bearish. So let's do this. Bearish. Okay, so now we have identified on the 5 minute and on the 15 that the market structure is bearish. Okay, now let's look for valid supply and demand zones. Where is it on the 5 minute? Where is it at? It's this one right here. Now, why? It doesn't look like the most promising one, but it is valid, and let me explain to you why. Because this candlestick right here was the cause of this whole break of structure that happened right here, as you can tell. So this candlestick, this whole move right here, this candlestick right here was the cause of this break of structure. So although it's not the best looking supply zone, it is still valid. Okay, it is still valid, and you can obviously tell by how it rejected off of this right there. It ended up rejecting, tapping in once, and then tapping in again. But right here we have a valid supply zone. So now that I see that this is valid supply zone because of the reasonings I just told you, we know that we have a valid supply zone. So we have supply, and that's valid. So we found a valid supply zone. Now it's just the entry model. So now all I need to do is just wait until the market comes into here and use one of these entry models. So I can use either a confirmation entry, a risk candle close entry, or a rejection entry. And what I did for this trade right here is I used a rejection entry. Now let me explain to you what a rejection entry is and how I actually entered off of it. So what I did is I went on to the 1 minute. I don't like looking at the 1 minute until I'm about to enter a trade, right? And sometimes I don't even look at it when I enter a trade, but I don't really like looking at a rejection entry until like the last minute. I mean lower time frames until last minute. But I took a rejection entry right here because look, as you can tell, what are we? We're bullish, 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 bullish. No signs of bearish momentum at all. And we're in a supply zone, but there's still no signs of bearish momentum, right? Right here, no signs, no signs, no signs. This one maybe a little bit, but still no, right? And then this one, no, this one, no, this one, no. It wasn't until this one right here, until we got that sign that this wanted, like this gave us some bearish signs, right? So what I did at this point was I didn't wait for it to close because it literally was about to close. Like I waited like probably like it was probably like 5 seconds until this was about to close. But what I did was I entered off of this as a rejection entry. And now what I did was all I did was wait for the candlestick to give me a good rejection, and then I enter. That's literally what it is. Okay, all I did was wait for some sort of bullish momentum, some sort of bearish momentum, a good bearish candlestick, and then I enter. It's either that or I wait for this to close and give me a good bearish close. But in this case, what it did was it rejected very good. So from my experience, and I don't know if you're like a new type of trader, I would go with kind of like going with the candle close entry or maybe a confirmation entry or risk entry, and I have examples of those on my other videos, so you can check it out if you don't know what those type of entry models are. But I wouldn't really go with rejection entry until you have some experience or you kind of know what you're looking for, because a lot of the times you could get faked out. Like right here, this right here, you could probably be like, oh, this is a good rejection entry, but I knew this wasn't a good rejection entry because of experience. So for me, if you're new watching this and you kind of just want to start getting used to this strategy, I would tell you wait for a candle close entry. And even if you might miss out on some profits, that's okay. But just I would rather tell you to go with that until you get some experience. um but yeah, the rejection entry, this one right here, boom, as you can see, it gave us a good rejection, and then boom, it ended up dropping, and then ended up hitting my price target. So that was actually a good trade, and that made me 156. So not bad. I bought a couple contracts. It wasn't a bad trade, and as you can see, it was a very good trade. I ended up getting out right here majority of my contracts right here, and then I ended up holding one contract, so I got out that one contract around here. And then yeah, that's when I got out. So it was a pretty good trade. It was a pretty good trade. I got out at the perfect time because this ended up coming back up and then doing all of this, and it would have actually stopped me out, and then it ended up reversing and going to the downside. But like I said, it's a very simple trade. It's a very simple trade. All I did was look for these three things, right? One, I looked for structure. I understood structure, and then after that, I looked for valid supply zones. And once I found that, I just waited for this to come into here, and I looked for one of these entry models. So, um, one thing I did want to mention was when it comes to risk management, because that is actually very important. Now, if you want to grow an account, or if you're looking to, yeah, I mean, and that's pretty much what people are doing when they're trading. If you want to not lose as much, what I would tell you to do is have a specific amount, a dollar amount with which you're not gonna lose anything more than that. So in this case, with this challenge that I'm doing, I'm only max risking $50. So $50. So let's see, $50. Let's put negative $50. That's the max that I'm willing to lose right here. Now, what you might be saying is, yo, well, what if it comes up like, what if we're right here, because I'm trading options and the theta and the Greeks and all that. But a good question that people have asked me is, what if we come into here, right? And then we come back up. Oh, my fault. What if we come down here and then we're right here and it hasn't hit my technical stop loss, but by the time we're right here, I'm already down 50. Do I hold it or what do I do? And what I always tell people is you want to set a technical stop as a reference point. Okay. Don't, like, for me, when I'm growing these accounts, especially trading options, what I do is I set this as a reference point. Like, this is ideally where I'm looking to exit my position. But this right here is how much I'm willing to lose. Like, that's the max I'm willing to lose. So if we're right here, like if the trade, if reverses on me and we're like right here, and if I'm already down negative $50 by the time we're right here, then I'm gonna exit the trade. I don't care if it didn't tap into my stop loss, whatever. I'm using this technical stop as a reference point. Okay. Now, the reason I'm doing this is because I'm able to manage how much am I losing on each trade. So for example, because I'm not good with math, I'm not good with numbers and all this shit, so this is the easiest way for me. So if I take two losses for $50, that's gonna equal $100. But if I know on one single trade I can hit anywhere from 150 to $200 max, I know that losing $50 or even less than that is not gonna affect my account. I'm able to have a whole losing week using this type of method. So, because I've gone with the whole setting technical stops, and when it comes to trading options, and because I watch a lot of these trading videos, and a lot of these trading videos, people don't really trade options like that or talk about risk management like that. So, what I would say for me, like the easiest thing to understand is that you want to set a technical stop as reference point, but have a actual dollar amount that you're willing to risk, like $50. $50 right here, boom, that's it. And then obviously, like the more contracts you buy, the more you can up the risk tolerance, right? So let's say I'm starting off at like 3 contracts and my max is risking 50, right? But let's say I up it to 5 contracts. Now the max I'm willing to risk is 100. But I know the max that I could make off of a trade, off of a good trade, is anywhere from $300, or let's say 250 to, no, let's say 300 to 400. Let's say $400. So now $100 loss doesn't really affect you, because you can, like, one winning trade is a $300 W, and then another one is a $600 W. So you get the point. And that's something that I just started learning from experience. And I know you might say, bro, of course, like it's simple, but I never had someone explain it to me in simple terms like this. I was the fucking beta tester. I was losing money. My contracts were getting burnt out, and I was losing because I was setting these technical stop losses and shit. So once I used technical stop losses as a reference point, and then had an actual dollar amount that I'm actually willing to risk, then that's when I started growing my account, because now the losses that I took were so minimal. And right now with the challenge that I'm doing, the max I'm willing to risk is $50. Last video that I posted, it was a $40 loss. So it was still a good trade. And I know what people are going to say all the time is, what if the trade reverses on you? What if the trade does something like this? I don't give a fuck. I don't care. Like I'm gonna be real with you. I don't give a fuck. Like I don't care if the trade reverses on me, because I know I can catch another banger trade tomorrow, next week. And that's the thing. I feel like when you're too dependent on trading, when it comes to like making like as your main source of income, or you're not confident in your strategy, and you're not confident in the ability that you can catch another trade tomorrow or next week, then I feel like that's when you worry about missing out on trades like this, or shit like this happening. I don't give a fuck. And this is why, look, I'm gonna be honest with you. This is why I think when it comes to the whole psychology and the psychological part of trading, I think the main thing that fucks people up is overcomplicating stuff. Now you have to understand, and this is something that I learned, is that you have to understand what type of trader are you. Okay, you have to really understand. And I started understanding what type of trader I was when I started asking myself questions. Like, I remember when there was a 1 week where I never prepared, I never did a pre-market analysis, nothing like that. And I had the best week. And I thought that that was bad, that I was being lazy, or I wasn't actually doing what I was supposed to be doing. But it was, the crazy part is that that is what I was supposed to be doing, because my personality, I'm a type of trader who likes simple. I like simplicity. That's why when I would wake up in the morning and I would look at these charts, and I would have a monitor, a big ass monitor, and I would do a pre-market analysis. I had my iPad, I had my MacBook, and I had my phone, and I was just preparing and doing all this shit. I would trade the worst, because I'm the type of trader who likes to keep it simple. I'm the type of trader who likes to wake up in the morning, only look for one setup, only look at one stock, and then trade that, and that's it. That's the type of trader that I am. And it's crazy because when I realized that, I started to trade so much better. I started to actually flip my accounts. And that's why I started making videos like this. Like, I'm literally showing you the process of growing an account. I'm not making these crazy ass thumbnails. I'm not making these crazy ass videos and none of that shit. All I'm doing is showing you the process. I'm literally showing you the process of growing an account. Like, literally, I'm showing you the process of it. And that's crazy, because when I started doing this, when I started just keeping everything simple, I started to trade so much better. And the thing, and who this video and this channel is actually for traders who like to keep things simple. If you're somebody who likes to look at multiple stocks, likes to trade multiple times a day, you take trades like 5 to 10 trades every single day, you're constantly looking at the charts, this video isn't for you. I'm gonna be real. This video isn't for you at all. Like, I don't like, if you enjoy it, then I'm glad you enjoy it. But if you're not that type of trader who likes to keep things simple, then this isn't going to benefit you at all. This is really going to benefit traders who were in my position, who were overcomplicating things for no reason. But when I stopped overcomplicating things, that's when I started trading better. Like, that's actually when I started trading better. I gotta fucking hold up. That's actually when I started trading better. I started trading better when I kept things simple. But it took me literally 2 whole years to figure that shit out. I would wake up at 5 a.m. I would wake up at 5 a.m. and I would back test for like an hour. I would journal for like another hour. I would watch webinars for another hour. And I still wasn't profitable. I still wasn't profitable. And it's crazy because I'm telling you, you will be able, like, if you're a simple trader, when you're watching this, I'm telling you, you will benefit more from just keeping it simple, not watching so many webinars, but understanding a strategy, mastering it, and gaining that experience rather than you back testing every day, journaling every trade, doing all this bullshit, doing all that bullshit. You're not gonna like everyone's unique, but what I really am trying to I'm getting these messages and it's fucking throwing me off. What the fuck? But what's really like helped me grow as a trader is that understanding what type of trader I am and going off of that, like trading off of my personality. So I'm a simple trader. I like to keep things simple. After I take a trade, I understand if I take a losing trade, then it's probably because I didn't one of these things were off. And then I can go off of that. I can fix it, refine it, and I learn. Boom, that's it. I don't have to sit there, look at my journal, look at all this shit, and then go. I don't have to do none of that shit. So that's basically like what I wanted to break down when it came to the whole psychological part of trading. All right. So if you're somebody who's a trader and who likes to trade simple, then I would really highly recommend you checking this. Like really like you don't have to like you don't have to follow me or nothing like that. All I want you to do is like kind of like start looking at this, and you can start antiquating it to your own type of likings, right? So maybe market structure, you can trade on the 1 hour, on the 4 hour, whatever. But just like kind of just keep it simple. Look for like a couple things, if it's two or even three things, and then go off of that. Risk management, however you like to take risk, whatever, but kind of go off of that. Use these things as like a reference point to kind of make your own strategy if you want to. But and the last thing I would want to say, because I didn't mention this in the video, is that fuck, what was it? Trading one stock, or if you trade forex or whatever you trade, one pair, whatever. Trading one stock for me made things so much easier. Like I'm gonna keep it real. Trading one stock made everything easier. I used to trade QQQ, SPY, Nvidia, all this shit. But when I really just stuck to trading one stock like AMD, that's when my shit took off. That's when my shit really took off. And it's crazy because I thought I was gonna have like fear of missing out and shit, but I don't, because I know that I've mastered AMD. Like I haven't mastered it, but I know that I've gotten used to AMD. I know how it moves. I know it respects my zones the most. So then that's what I'm comfortable with. I'm more comfortable with that. You know what I mean? That's literally how it is. It's like and I'm gonna bring it to a quick example before I end off this video. But it's like, let's say you're in a relationship, right? The reason why a lot of times you guys stay in those relationships and stay with a girl who maybe you don't really like anymore or whatever is because you're comfortable. You know how she is. Like you know how that girl is. You know everything about her. You're comfortable. You like having to go out there and then learn a whole nother girl and how her personality and go through all that. So I kind of used that into this. It's like, but this shit, AMD or whatever ticker you trade is not gonna fucking cheat on you or fucking do some bullshit, right? do some shicey shit. But you get the point. Like, why deal with multiple stocks and try to learn all of them than just mastering one and getting comfortable and getting good and comfortable at mastering that one? It's like, why go and fucking text 10 girls at the same time? Like, yeah, you might have fun and all that with one of them, but what do you think is going to be sustainable for the long term? Just fucking with one girl, right? Now, I can get into a whole fucking another topic about talking about that shit, but I don't want to talk about it. But it's just to give you an idea. So, basically though, what I mean is, like, I want you guys to understand that. Like, I want y'all guys to get, like, that was probably a bad example, but what I wanted y'all guys to really get from that is that, um when you stick to one thing, you get very good at it and you start mastering it and you start knowing how it moves. So once you start knowing how it moves, it's better to stick to that one, master that one, and then get good at it. Like I'd rather not trade it for 2 days, not catch something for 2 days, than try to trade QQQ and take a loss because the structure didn't align or I didn't understand it, shit like that. But that's basically it, bro. Other than that, that is basically the video. All I wanted to say was, if you enjoyed this video, like, comment, subscribe, do all that shit. I probably went on talking for a long time. This is probably a longer video than usual, but if you are watching still, y'all already know what to do. Other than that, that is it, and I will see y'all guys tomorrow or whenever I trade again.